Morning greetings, this is Mr. Choke. If you're watching this, you are definitely in the right place. Please don't forget to hit that subscribe button down there, and I promise you that will make your problems of accounting a thing of the past. With that out of the way, let's get into the lesson of the morning. In this morning's lesson, we are going to calculate cost of sales as well as gross profit using the periodic inventory uh, system. Now, remember, whenever we use this system, it operates on a principle that a movement of stock is not recorded on a continuous basis. Most of the time, here they will give you either information for the month or for the year. So here they've given us information that relates to one specific month, which is June. So they're saying that the following information for June 2021 relates to Manyaga Traders. The periodic inventory is in use and the markup is 25% on cost. Now, here, what we need to do, very important, we need to remember that in terms of periodic, number one, whenever you record, you don't record the movement of stock during the year or during the month. You have to wait for at the end of the month. Okay, so whenever they sell, we need to remember that cost of sales will not be calculated when they sell. They will calculate it at the end of the month. So number one, we are required to calculate the cost of sales. Number two, we are required to calculate the gross profit. Before I go into the lesson, remember guys that if you want me to become your online tutor, you can call us on the following numbers: 073 036 3208. Our lessons start from 500 if you want us to tutor you online, and you will get 2 lessons per week. If you want me to tutor you face to face and you are at least around Hammarskrall, I will charge you around 8,000 for 2 lessons in a week. So please make use of this information that I'm making available to you. With that out of the way, let's go back into the lesson. Now, remember, here we are required to calculate cost of sales. Now, you cannot calculate cost of sales without knowing the format that you are supposed to use. The format that we use is as follows. You always need to make sure that you always start by you always start by recording. You always make sure that uh, you start by recording the information that is known to you. Okay, so now what I know is that the format says that I need to have my opening stock, I need to have my net purchases, I need to have my carriage on purchases, I must have my customs duty. Remember, customs duty will apply when I bought overseas. Okay, and then I must also subtract my closing stock. So what you do as you write this format, what you need to do, you make sure that you first start by recording the information that is available to you. And remember, you are also required to calculate gross profit. So in order to do that, you need information about the sales, you need information about cost of sales, and together, remember, they will give you gross profit. Are we together, guys? And always remember that your cost of sales must be bracketed. So we will start with the basic information that we have here. Our opening stock, we need to go and check what are we given for opening stock. So the information here is these are the transactions that happened during the year, and here is the information that we need. So they started by giving us our opening stock, which is 105,000. So we will start by recording that 105,000 as our opening stock. So we'll write that 105,000 here, and then we go and record our closing stock at the end of the month, which is 140,000. Remember guys that closing stock should always be subtracted. So our closing stock according to this is 140,000. So you already have 2 marks for doing this little information. Okay, next then we can go to the transactions that have happened during the year. Transaction number one says that we purchased merchandise from Brogost Ltd, and then 35,000 was transferred to their current account. So what we did here, we bought merchandise, we bought trading stock for 35,000, and then we paid for cash because they said we transferred to their current account. So under purchases, we will have that 35,000. If there's any return that was made, we will update. Okay. Next, they're saying that we purchased merchandise on credit from Mohasha wholesalers for 105,000. Attached to the invoice is the delivery charges of 1,000. So now here, what you need to do, remember when we calculate using periodic inventory system, every item has got its own account. Carriage on purchases will not be mixed together with our purchases. We'll have to record carriage on purchases separately. Okay. So what we need to do now, we firstly need to record the purchasing of the inventory for 105,000. So that 105,000 will come here. We will say plus 105,000. And then after this, we also need to record the carriage on purchases of 1,000. Remember I said carriage on purchases, they charge it when you bought local. And then when you bought outside the country, we call that customs duty. Okay. Next, they are saying that we sold goods on credit to Naidu for 90,000. So here, what we need to do, this information about the sales, we will need to keep it in mind. It will affect one of our adjustments. Okay, so we will come back to that. Remember I said in terms of this what do you call it, in terms of this information, they don't record the sales of stock immediately. But what will happen is that as soon as we have calculated our cost of sales, we will be able to convert it into we will be able to convert our sales into a markup. So this information for now, because we don't have the original sales from the beginning, this information we will shelve it for now. Okay. Let's continue. So next, they are saying that let's hear what they are saying. Remember I said with periodic, when you sell, you only record for sales, you don't record for cost of sales. So for now, we are calculating cost of sales. Then obviously at the end of the year, once we get our cost of sales, it will help us to get the accurate sales. Okay. Now, transaction number 9, number 10, we will wait a bit on it. Now, next they're saying that return merchandise to Mahashwa wholesalers cost price was 4,000. So we returned stock to Mahashwa, and then we are paying them. We are returning the goods that are valued at 4,000. So they didn't say anything about carriage on purchases, so we can assume that they will refund us for the transport. So we are just going to reduce our purchases by 4,000. So under purchases, we're going to say minus 4,000. And then from there, what we are going to do, we go to the next transaction. Next transaction, they said that they sold goods for cash, and then the cost price of those goods is 30,000. So remember here, what we do in periodic, you don't record you only record transactions when you sell. But remember what I said, they didn't give you the original sales. So what we will do, we will get our cost of sales at the end of the year, then we transfer it into a selling price. Okay. Now, next they are telling us that Mr. Naidu returned the goods of 1,200, referred to the transaction on the 10th. So remember what we need to do here. We need to make sure that we get our selling price, our sales correctly. Okay, and then one thing that we also need to keep in mind is we need to try to remember that when goods are returned using this method, do we update our cost of sales or not? If we were given our selling price straight, if it was given to us straight, we were going to take it and update it. But remember here, what we need to do, when they sold for this 90,000, the calculation will normally they won't they will only update the selling the return part, but they wouldn't update the cost of sales, because they have to wait for at the end of the year. I hope that makes sense, guys. Okay. Now, I want you to take these 2 seconds, 2 minutes to think, Hori, how are you going to record transaction number uh, 10 and transaction number, transaction that took place on the 10th, on the 23rd, and then also on the 28th. I want you to think about what you are going to do with that information. I'm just giving you 10 minutes. You are left with 8 minutes. So please remember that you remember what I told you about this. Okay, you are left with about 4 minutes. You're gonna make it to 2 minutes. Okay, I believe you guys are done. So here is what we are going to do, guys. So remember, transaction number 3, um, transaction number 10, we can agree that it has already been included. When you calculate the cost of sales automatically, you will be able to get your remember, your cost of sales has already taken into anticipation that sales have taken place, but there's a catch that we must do. I'm going to show you 2 methods that you can use to get this. If you are not given the original sales, there's a way that you can use to get your net sales. But for now, let's try and finalize our cost of sales. So in terms of carriage on purchases, we are still going to have 1,000 here. And then uh, And then in terms of our net purchases, we are going to say 35,000. I'm just going to try to do it quickly. We're going to say 35,000 plus 105,000. And then we are going to minus 4,000 from this, which will give us 136,000. So our net purchases is 136,000. Remember, if there are any purchases, you must take them into consideration. So we're going to say 105,000. We're going to take it and plus 136,000. We're going to also plus 1,000, and then we are going to minus 140,000. Okay, so it's going to tell us that our cost of sales, in this case our cost of sales, will be equals to 102,000. 102,000. Okay, I hope we are so far we are together. So our cost of sales is 102,000. But here, guys, remember we are looking at the cost of the goods that have already been sold. Now, what we need to do, because we know already that we got our cost of sales and we know that our cost of sales is 102,000, we are going to bring it as it is, getting it from the final answer that we got here. And then what you can do to go back to your transactions and check if there was any return. Now remember, actually here, this cost of sales here should be able to help us to get the sales that we are anticipating to have made, because they gave us a markup. So my sales before returns will be, remember they said markup on cost is 100, and they said it's 100 and is 25%. So it means that my sales is represented by 125, right? So we are going to say 102,000 multiplied by 125 over 100, and this will give us the amount that we are going to get. Okay, so we can say 102,000 multiplied by 125 divide by 100, it will give us 127,500. So our sales before we record returns is 127,500. So we'd have 127,500. Now remember, if you take this 127,500, you need to take it and subtract the returns that they said took place. Remember, you must update your sales. So they said there were some returns that took place and then they amounted to 1.2. So if you subtract that 1,200, it will give you the net sales that we are supposed to have. So if we say 127,500, we minus 1.2 is going to give us 126,300. Okay, so this will be our net sales. So if we say 126,300, we take it and we subtract 102,000, 1,200. Sorry, 102,000. That's going to give us 24,300. So the gross profit that they want is 24,300. So what is important to get here is that when you calculate your cost of sales, try to make sure that remember I said in terms of cost of sales, you are looking for the cost of the goods that have been sold. Anything where you return the goods back to the suppliers, you must update your purchases. Hence they are saying net purchases. Anything that will change your accounts, like customs duty and your import duty, you need to make sure that you record that. Okay, now other learners might have opted to look for sales as follows. Remember here they had given us they told us something. They said we sold goods to the value of, I think I saw something like they said we sold goods to the value of 90,000. So other learners might opt to say that 90,000 and then plus. Remember there was something about they said sold goods for cash, the cost price was 30,000. So other learners might opt to look for the selling price, which is if we say 30,000 multiplied by 125, divide by 100, it gives us 37,500. So might opt to say plus 37,500, and then they lastly subtract that 1.2. We should still get the same net sales. So if we say 90,000 plus 37,500, and then we subtract 1.2, it still gives us 126,300. So when you do this, guys, you need to make sure that you choose a method that best works for you. Okay, but for me personally, if I'm given the markup, I will use my cost of sales to get my sales. Then I subtract the return, because remember, the cost of sales that I'm getting here, cost of goods sold, gives me what I anticipate to have sold. But remember, on this transaction of return of one of 1,200 was not included in that. They didn't take it into consideration in the selling price, in the sales, because you were not given the sales. So that's why you have to do it like that. Okay, thank you so much, guys, for watching. May God richly bless you. Remember, if you want me to become your online tutor, you're more than welcome to get in touch with me by using the details that are available here. Remember, our lessons are just from 500 per month. Thank you. God bless you.